I'm Ingrid Srinath, and my colleagues Bindi, Anchal, Gautam, Juhi are on this call. So if you need any support or any help during the call, please just ping one of us. I will start by sharing my screen, which is here. Just a word first from about who we are. Ashoka University, for those of you who don't know us, is this liberal arts and sciences university based in Sonipat, just outside of Delhi. It's, for us at CSIP, particularly interesting because it's this very, very unique model of collective philanthropy. There are over 130 individuals who contributed significant sums of money to create this institution. And in a very short time, under 10 years, it's gone on to build not only a great university, but also a great reputation. And I want to say really made the liberal arts popular among Indian students. We currently have over 2,500 students on campus, and they come from every state and a large number of cities across India, plus 27 other countries. Besides academics, Ashoka is also home to a number of academic centers. When I last counted, there were 14, including ours, which is the Center for Social Impact and Philanthropy. As the name says, what we do is try and strengthen the ecosystem for both social impact and philanthropy through knowledge, convening, building a sharper narrative, and helping to establish norms for these sectors. RSN, or Resilient Strategies for Nonprofits, this is the third edition. We started it as a response to COVID. Pre-COVID, we had a 6-day residential program that we would do on our campus. And then, of course, that became impossible in 2020. And we reached out essentially to nonprofits. Then we talked to about 50 nonprofits in 2020 and said, what is it that you need now? What can we offer you now that makes sense for your current situation? And RSN1 was that response. We then repeated the exercise last year and did a much more formal research where we talked to about, I think, 250 nonprofits across the country and said, what's your current situation? What can we respond now? And this year, again, we did consultations physical consultations in Mumbai and Delhi, and an online consultation for the rest of the country to ask that same question. Where are you now? What do you most need by way of support or input? What can we offer you now? And what you're going to experience over the next 3 days is our synthesis of the responses that we got. We are truly fortunate, blessed almost, I would say, to have two amazing gentlemen join us now. Cash has been part of our faculty since 2017, and we're very, very, very grateful for his continued support and partnership. You've already seen, I think, his bio, but here are the highlights. He's the Baker Foundation professor at Harvard Business School, has been the chairman of the marketing department, and now co-chair of the Social Enterprise Initiative at HBS. He has taught too many courses for me to list, and currently teaches business at the base of the pyramid and a general management program for high potential executives, as well as a number of executive education programs, including the strategic nonprofit management, strategic perspectives in nonprofit management, or SPINM, which in many ways is the mother of all these other programs that you currently see around the world. Day after tomorrow, we will be joined by Cash's colleague, Tom DeLong. Tom is also a faculty at Harvard Business School and has taught, he says, over 20,000 MBAs and executives, both in Cambridge and around the world. And he's truly a force of nature. You'll experience for yourself these two gentlemen over the next 2 days. And you will be the judge of whether what I'm saying is an exaggeration, as Gash just said, or whether it is, in fact, underselling their skills. I am Ingrid Srinath. I am the director at CSIP. I've spent 24 years now in and around the sector after an MBA from IIM Kolkata and a 12-year stint in the corporate sector. Let's talk about you now. How many of you are there? Where do you come from? What do you do? So we have 83 participants signed up for RSN 3.0. Your median and mean age is 42 years. The youngest person, we're glad to say, in the cohort is 24, and the oldest is 65. 49% of you prefer the pronouns she, her, 47% are he, him, 3% are they, them, and 1% of you did not say. The vast majority, over 3/4 of you, work with grassroots implementation organizations. A substantial number, the rest essentially work in what you might call the ecosystem, which is research, OD, funding agencies, advocacy, and communication. And the range of themes that you address in your work, of course, as you would always expect in India, the single largest chunk comes from education. But what we've tried to do is make sure that we have a much more diverse group than you would normally find in such a course, by including people, particularly those that work with marginalized groups or economically disadvantaged groups, people who work on climate, people who work with people with disabilities, healthcare and livelihood, and children as well. And though, sadly, I should say, too many of you are still the Bombay, Delhi, Bangalore mafia, there are thankfully people from, how many is it? 14 other states here in the room today. Many of you work nationally, but a large number also focus on rural India, or only within cities, or a combination of urban and semi-urban. And there's a wide range of sizes of organizations here. You'll notice that the largest number are almost a third have a budget between 1 and 5 crores. Almost a fifth have a budget under 1 crore. So if you combine those two, 48% of you operate on budgets of under 5 crores. And then smaller numbers in the 5 to 20 crores, 20 to 80 crores, and a fortunate few who operate at budgets over 80 crores. Today, my topic for you is going to be really to provide the big picture, the context in which we're all operating today, in terms of, you know this better than I do, but I'll focus really on what is changing and how this is impacting civil society organizations in India. Just as a, where are we now? Where are we coming from? We know that in the period, but pre-independence, really, I mean, philanthropy and civil society in many ways contributed to our independence. And because it's the 75th year this year, it's important, I think, to recognize that contribution. And then following independence, a large chunk of investments from big business and from the wealthy in India went towards building these great national institutions that we talked about: education, health, research, culture. You see their names on all these very famous buildings all over the country. The next point of inflection, if you will, in this evolution, it happens with the emergency in 1975, and a lot of groups that really found their calling during the emergency as part of the movement to restore democracy, after the emergency morphed into what we now know as secular NGOs. They joined what were an earlier cohort of more Gandhian NGOs. And so you have sort of the Gandhian NGOs and this new layer getting added on, which were the more secular NGOs who bring this more development focus to their work. You also start to see the beginning of more strategic or structured fundraising. The early 90s, with liberalization of the economy, we see a whole new set of people that become wealthy as a consequence of privatization and the opening up of the economy. And they bring with them to their philanthropy this more technocratic approach. They're more focused on measurement. They're much more impatient with the pace of change. They're much more technology driven. You start to also see the beginnings of online giving, and partly as a response, as I'll discuss in a few minutes, NGOs start to become more corporate to deal with the sort of expectations of these new philanthropists. 2013, we get the Companies Act Amendment, which gives us the CSR law, as it's called, and you start to see this large influx of both philanthropists and philanthropy from the corporate sector. At around the same time, you start to see social impact capital or social venture capital type models start to emerge in the sector, including investments in for-profit social enterprises as opposed to non-profit NGOs. And then, of course, more recently, we had the impact of COVID, which I'll talk to in a moment, and the Social Stock Exchange, which has just been notified by the Securities and Exchange Board of India, which I will actually go into a bit of detail because it's new and we know that there's a lot of interest in the topic. It's important, however, and I think partly for our humility, but also partly just to get a sense of perspective, to realize that all of this organized philanthropy and civil society is the tip of an iceberg. And really what it rests on is this much bigger edifice of grassroots movements across a range of issues. So we've had them from the freedom struggle, the labor movement, the gender movement. Very recently, we saw the power of the farmers movement, but then the great movements of the early 2000s, which were the right to education, right to information, right to food, and right to work that we're still seeing the benefits of. And this, in turn, rests on an even larger ocean, if you will, of faith-based and communitarian giving, which is people looking out for each other, for extended family, for their household staff, for people, beggars, for religious giving, which is the largest part. CSIP will release a study next month, which will map this entire universe of giving. And just as a teaser, if you will, for that, 96% of households in India give to religious causes. Only 3% give to secular NGOs. The numbers and the data on our sector are very sketchy at best. This is the hardest data we have, and this is up to 2019, because that's the last year for which we have complete filings with the government. So this is when we have the FCRA, the CSR, the income tax data. What this tells us really is that of the 163,000 crores of social impact capital, if you want to call it that, no, let's call it philanthropic capital, the bulk of it really is government. And this is government funding that is channeled through NGOs, contracted services through NGOs. What you can see there is there's been a precipitous drop in that stream of funding. What has grown in comparison really is H&I giving, which has almost doubled during this period, and substantial growth, of course, in CSR. So what we're seeing is this radical shift now towards private funding, in particular funding from the wealthy. Again, just to give us a sense of perspective and keep us humble, the entire total private domestic giving in 2019 at 89,000 crores was 24% of the increase in Gautam Adani's wealth last year. Just to give us a sense of how small we are in comparison to the vast ocean of wealth that this country now possesses. A new report from Bridgespan just a few weeks ago projects a similar number. So they are saying that financial year 21 is 110,000 crores. which in their case, they're including impact investment. And so the numbers, and it's 21 data as opposed to 2019, but the numbers are more or less in sync. They believe that if we just continue business as usual, then this will double in 5 years, which is not an unreasonable expectation. This is how it's been for the last 10 or 15 years, a sort of a doubling in the size of the market every 5 years. But Bridgespan believes that if India's wealthy in particular were to actually give on par with some of their international counterparts, then we would see a huge jump. And from 16 billion, we could be looking at almost 60 billion in the next 5 years if that happens. So one of the things, and I just briefly touched on it with the social impact capital idea, is that the forms of capital are changing. Where if you were to sort of lay this out on a spectrum where you've got on the left of the screen your traditional market investment where you bought stocks and shares and mutual funds in for-profit businesses, where your return is primarily financial, not primarily, it's only financial. Then you start to implement maybe what I'm calling negative filters, which is you're still focused on financial return, but you're asking your investment advisors to screen out certain kinds of businesses. You don't want to be investing in landmines or in organizations that employ children or that produce alcohol, tobacco, gambling, etc., etc. At the next stage, you start to see people looking for a blend of financial and social return. And this brings us to this whole realm of impact investing that is growing even faster than philanthropy is growing. When you get to almost entirely social return and no financial return, is the first sort of milestone you hit there is what we're now calling pay for performance philanthropy. This is the most popular form of this is the social impact bond or development impact bond. Beyond that is what you could call venture philanthropy, which is really philanthropy aimed solely at a social return, but which brings the values and mindset of venture capital investment to it. So it's much more metrics focused, much more return on investment driven. And then finally, of course, you have plain old vanilla grant making traditional philanthropy. But as I will talk in a minute, that's also changing in its orientation. I want to spend a few moments on the social stock exchange just because it's new, as I said, and we've seen a lot of interest in the topic. In many ways, the social stock exchange will bring together all of these different, the whole spectrum of social impact capital. When the finance minister first spoke of it in her budget speech in July 2019, she just defined it as an electronic fundraising platform under SEBI's regulation, which will allow both social enterprises and voluntary organizations raise capital as equity, as debt, or as units in the form of a mutual fund. India is not the first country to think about doing a social stock exchange. There have been experiments in the UK, Canada, Singapore, South Africa, Brazil, Jamaica, and Kenya already. Now, none of these has been particularly successful, though they have followed quite a wide range of models. Some of them are purely discovery platforms, information exchanges, where people with capital can find people who are seeking capital and vice versa. Some of them do a more active matchmaking. Some of them are restricted to for-profit social enterprises. Some are restricted to non-profit organizations, and all of them offer really fairly limited numbers of instruments and sharply defined outcomes. The big difference between all of these and what's happening in India at the moment is the backing of the government. None of these other international experiences have been launched with the weight of the government behind them. So the fact that it's the government of India launching it with the legitimacy and credibility of SEBI as a regulator gives this experiment, probably a greater chance of success. The link on this slide will take you to a really good report which compares all of these international experiences and allows you to, if you're interested in the topic, discover more about social stock exchanges. As I said, the main goal of the social stock exchange that Mrs. Sitaraman has defined is how do we attract new capital to the field of social impact? How do we make the creators of social impact, people like yourselves, more visible? How do we address the biggest problem we face as a sector, which is how do we get higher levels of trust and credibility? And in so doing, really shift the whole paradigm for the social sector ecosystem. The main things to remember about the social stock exchange is that they will be housed within existing stock exchanges so that they can benefit from all the infrastructure and relationships and expertise that already sits there. The definition of who will be eligible, and I will go into a little detail on this in a second, is really defined by a concept called primacy of social intent. You will have to demonstrate that your core purpose is social impact rather than financial return. There are 15 eligible activities, and this is an important point. Even if you as a nonprofit or as a social enterprise decide that you don't want to list on the exchange, which means you don't yet want to seek funding on the exchange, you can still register on the exchange and thereby gain, if you will, the credibility that comes with having complied with the kind of listing requirements that the exchange will insist upon. When we say primacy of social intent impact, for nonprofits, this is not a problem. If you are registered as a society, a trust, or a Section 8 company, if you have your 12AA registration and your ATG registration, your social intent and impact has already been proven. However, if you are a for-profit enterprise, then you will need to jump through these hoops. You will have to establish either that 67% of your revenue in the preceding 3 years have come from providing one or more of those 15 eligible activities to the target population. Or you will have to establish that 67% of your expenditure in the preceding 3 years has been incurred on providing those services. Or you will have to establish that 67% of your beneficiaries or customers come from groups that consume those 15 listed services. These are the 15 activities. You'll find when you go through them in detail that they literally cover practically anything that you can think of. Everything from the basics of hunger and malnutrition, inequality, healthcare, sanitation, water, education, employability, livelihoods, etc. But also importantly, for example, ecosystem organizations. So item 7, for example, supports, if you're a supporter of incubators of social enterprises, you will qualify. Item number 8, if you're a platform that helps other nonprofits either do fundraising or capacity building or a range of other services, you will qualify for listing on the stock exchange, and so on through the list, including the most contemporary activities like bridging the digital divide or even addressing issues of misinformation, fake news, and data protection. The other important thing is that it's not only service delivery in these 15 areas that will make you eligible. You can certainly, if you're delivering products or services or programs, you will be eligible. But also if you do research, policy analysis, awareness building, governance, capacity building in any of these areas, you will be eligible. So as you can see, it's a much wider range of activities than even those that are covered under the CSR schedule. People who will not be eligible to list, and this, when I say list, these are people who will not be able to raise money on the stock exchange, will be corporate foundations, political or religious organizations, trade associations or professional associations, and infrastructure companies, except for those that provide affordable housing. So all of these entities can be suppliers of capital to the social stock exchange. So a corporate foundation can be a funder on a social stock exchange. What they cannot do is use the stock exchange to raise funds for themselves. As I said, if you're a nonprofit, then you need to either be a society, a trust, or a Section 8 company. You need to have your income tax exemption. You need to have your ATG registration, and you need to either be spending over 50 lakhs, not either. You need to both be spending 50 lakhs per year or receiving funding of 10 lakhs per year. So again, you can see this is a fairly low bar. It's not restricted to only large organizations. If you want to list or if you want to register, you will have to provide some of this data. You will have to, of course, describe what your vision is, what issue you work on, which groups you work with, what your approach is, and so on. You will have to be able to enumerate what your reach is, not just the width of your reach, but also the depth of your reach. What are you doing to ensure inclusion by marginalized communities or work in aspirational districts, for example? You will have to tell a story about who you are and what you do, not just for your beneficiary community, but for the ecosystem at large. So for example, you might be able to say, I deliver education to underprivileged children in this slum in Hyderabad, but what I also do is help to change policy on education for children. And that will be your ecosystem effect. You will, of course, have to provide data on your governance and your finances, including, your registration, your tax status, your board members, your annual report, and so on. The Institute of Chartered Accountants of India is busy. They're hard at work developing standardized financial reporting for this. And really importantly, I cannot stress the importance of this. They have put out a list of impact indicators for all the 15 areas. And it's open for consultation right now. It's open till August 26th. You must take a look at those impact indicators, and you must submit your comments, because this is going to determine who can raise money, how much money you can raise, how attractive you will be to investors on the social stock exchange. It will be completely a missed opportunity if after August 26th or when this thing launches, we say, heck no, those are really bad impact indicators. You should have asked us to give much better ones. This is your opportunity, and you really should seize the opportunity if we're all going to maximally benefit from this new channel. What are the actual instruments that are going to be listable on the stock exchange? These are very finance jargon names, but they're really not as complicated as they sound. So for nonprofits, for example, there is something called the zero coupon, zero principal instrument. What this is an old-fashioned grant. It's an old-fashioned grant wearing some, fancy new pinstriped suit. The second instrument is a social venture fund. This is really like a mutual fund. This is many investors contributing to a fund, which can then be distributed to many NGOs, many nonprofits working on the ground. This one is of particular interest because I think it allows smaller organizations to be part of the system. So if you're a smaller organization, you may not be able to list independently, but you can be part of a social venture fund where there's 20, 30, 50 organizations that benefit from that kind of fund. There are, of course, traditional mutual funds. The example here is the HDFC Cancer Fund, which is essentially people, an organization like HDFC launches a mutual fund, and the subscribers to this mutual fund essentially say to HDFC, I don't want the dividend on this mutual fund investment to be paid to me. I would prefer instead that you contribute it to a cancer-related charity. And so there's the opportunity to you could create a climate mutual fund or a gender mutual fund or whatever thematic area you like. And then, of course, there are development impact bonds, which I'll spend a second on in a second. For-profit enterprises, of course, it's the standard. They can raise debt, they can raise equity capital, they can also avail of the social venture fund and the development impact bonds. So a word about development impact bonds for those of you that are not familiar with it. The way this works is there are 4 entities involved. There's the service provider or the nonprofit that actually delivers impact on the ground. I would much prefer impact provider, but let's call it service provider for now. So this is really the structure of the first development impact bond in India, which was pioneered by Educate Girls. What they do is they commit to achieving certain social outcomes. So these many girls will get enrolled in school. This will be the dropout rate, or the dropout rate will be less than this, and so on. An investor we call the risk investor, in this case UBS Optimus, provides Educate Girls with the funding to achieve those goals. Once the period of the bond is complete, an independent evaluator, in this case ID Insight, certifies whether or not the impact that was promised has actually been achieved. If that happens, and when that happens, then the outcome investor, in this case SIF, repays the risk investor, which was UBS. So UBS recovers their money with, in fact, some return from SIF, and everybody, it's a win-win-win situation. In addition to the instruments on the social stock exchange, the other things that they're building is this whole ecosystem that will support it. So there will be information repositories, people like GuideStar or the Darpan portal or Give India or others, who will basically serve the purpose of listing of providing a sort of a data set of NGOs. There will be a self-regulatory organization which will be under the Chartered Accountants Institute that will be responsible for the process of registering, deregistering, and establishing standards for organizations on the social stock exchange. An important one is the creation of a whole new system of impact auditing. Those of you who get funding from CSR donors are already familiar with this, that the new CSR rules now require you to submit to an impact audit by a third-party impact auditor. This will now, for all organizations on the social stock exchange, this will be mandatory. But the important thing that's happening, that's changing, is that ICAI, the Chartered Accountants Institute, is developing a whole curriculum for the training of impact auditors, then the certification of impact auditors, as well as ethical standards for these impact auditors. And finally, there's a 100 crore fund been proposed that will help nonprofits on board onto the system. So given that for most of us, words like zero principal, zero interest bonds are, Greek and Latin, what this 100 crore fund will do is essentially educate us, capacitize us to be able to list on the exchange. Things we don't know yet. We don't know how they're going to handle international money. Is it going to be permitted or not? If it is permitted, what happens to compliance with FCRA? Can you combine foreign money and Indian money in a social venture fund, for example? How will you get around the subgranting ban? How will you comply with the 20% ceiling on administrative expenses? All of that good stuff we still don't have answers for. I believe the finance ministry has sought clarification from the Home Ministry, but we haven't heard anything since then. There were also a series of recommendations made on tax benefits, which we don't yet have clarity. So will CSR donors to the social stock exchange get 100% tax write-down? Will there be 100% tax write-down for all the instruments? Will you be able to contribute over and above the 10% cap on your income and still avail of the 100% tax exemption? Currently, as you know, you will lose your tax exemption if your business income is more than 20%. The recommendation is to raise that ceiling to 50%, and so on. So there's a whole range of tax-related issues on which we have no clarity yet. And finally, of course, we have no clarity on exactly when all this is going to kick in. We know that the Chartered Accountants Institute is working overtime. We've had the gazetted notifications happen. And so all the pieces are in place. We're now just looking for a formal announcement from the stock exchanges as to when they propose to launch. Sorry for that long digression to the social stock exchange. I just thought since it was new, we could spend a bit of time on that. What this means for the nonprofit sector is that just like you've seen that spectrum of capital emerging, we're starting to see a similar spectrum of NGOs, if you will, emerging. So you have on the left the traditional nonprofit. These are organizations that primarily operate through grants, whether that's grants from government or business or philanthropists or from the public at large. Then you have this hybrid model, which is nonprofits who also have a substantial business income. Now, for me, for example, when I worked at CRY, this was the greeting card business for us. But there are others that sell services, for example, that say we provide services at market rate to one set of customers, and then we cross-subsidize. We use that income and that profit to cross-subsidize services to people at the bottom of the pyramid. There are also not just nonprofits that have an income generating model, but these dual entities now, where you have both a for-profit and a nonprofit registered, and you book different kinds of income in different entities, depending on the tax and other considerations. Then you have the for-profit social ventures. These are social enterprise, these are for-profit entities whose primary purpose is social, but they are structured as a business, and they are able, therefore, to raise debt, equity, and to operate in other ways like a business would. Then you have socially responsible businesses. These are businesses whose primary purpose is financial return for their investors, but they have chosen to operate in a way that at least does no harm. And finally, you have the traditional old-fashioned for-profit companies who are now being compelled to integrate more environmental, social, and governance parameters into the way of operating. Despite the amount of change that I've just described as happening, some things sadly don't change at all. And so it's still hard to convince donors and investors that anything besides plain service delivery is an effective way to achieve impact. It is still hard to convince our funders that to get the levels of professional skills we are looking for, you need to pay a reasonable, you need to pay a viable, allow people to make a viable living. It's still hard to get away from the micromanagement of line items on the budget where, they're like, and why do you need to spend so much on travel? And what, how many people will be attending this workshop that you're budgeting, and so on and so forth. What has changed, however, in terms of donor or investor mindsets is these three things. Whether you're talking about the billionaires at the top of the pyramid, and we now have, as you know, over 200 if you count the ones that don't live in India, or you're looking at young people who are just starting out and who really want to change the world, purely with passion and conviction. At either end of the spectrum, people who engage with the nonprofit sector are now looking to have a much more hands-on approach. That old school of donor where they wrote you a check and waited for 6 months for you to come back with a status report that said, okay, here's what we did 6 months, and now we're ready for the second tranche of your donation. That school of capital is getting smaller and smaller. All donors, whether they're CSR donors, philanthropists, international or Indian, international are slightly more hands-off than Indian, high net worth individuals, the public at large, everybody is looking not just to be a passive investor in your venture, but are looking to really shape what you do and contribute all their assets, their money, their social capital, their intellectual capital, their networks, etc. The second thing that's changing is people are doing this at a much earlier stage in life. So where in the past you had people, the Rockefellers, for example, turning to philanthropy after their productive corporate lives were over, today you're seeing this happen much, much younger. I mean, I'm looking, for example, not just at young people starting up their own ventures. But if you look at a group like Living My Promise, which is citizens who've agreed to contribute 50% of their net worth to social impact, many of the members of Living My Promise, which has now crossed 100, 110, I think, or 108 people have pledged. Many of those are people in their 30s and 40s, rather than people in their 50s and 60s, as you might expect previously. And the third thing that's changed is what I'm calling the logic of disruption. So many of these new philanthropists made their wealth by disrupting markets and disrupting industries. And they're bringing that same logic to their social impact investment. So it's not enough to, as it used to be back in the dark ages when I started, you could, there were people who'd be like, well, as long as a few children are better off, that's good enough for me. There are very few of those kind of donors left anymore. What donors are looking for is transformational change. They want to eliminate poverty in my lifetime. They want to transform healthcare delivery. They want to eradicate inequality. Or if you're Mark Zuckerberg, for example, eradicate disease, all diseases, not just one or two. And so you're looking at these big system change, game-changing systemic bets. One of the things I find more recently is that it's easier to get attention from a philanthropist with a 20 crore proposal than it is with a 20 lakh proposal. You're much more likely to get their attention if you say, here is this big, shiny new thing that I've got for you to think about, rather than here's some incremental change in a proven model that has worked over 30 years. So the ambition, there's a huge mismatch currently between the ambition of donors and the ambition of nonprofits. Nonprofits are operating at incremental growth, a pace of change that is, anticipating 10, 15 years to achieve outcomes, and minor incremental kind of innovation. Whereas donors, as I said, are looking for the game-changing bet. The entire mindset, the style of operating, your new donor is coming from a mindset of move fast and break things. It's, well, let's invest it, let's do it, let's see whether it works or not. If it doesn't, we will change it. We will pivot to a different model. Whereas most nonprofits are starting from, we must first do no harm. We must first, test out this thing till it's done to death before we consider rolling it out anywhere. We speak entirely different languages, those of us that come from the corporate sector versus those of us that come from the nonprofit sector. And we quite often miss each other entirely. I once did a 30-minute presentation on brand equity before I realized that the only meaning my audience ascribed to the word equity was justice. And so it didn't make any sense to them at all. What you're seeing from civil society by way of response to this onslaught of change is widespread corporatization. So in the hope that we will get access to all of this fancy new money, we're looking at putting corporate people on our boards, we're looking at hiring corporate people in our leadership teams, we're looking at corporate people up and down the line in our staff, and we're looking at building a very different ethos and culture in our organizations from the ones that we've been used to. So whether this is, democratic decision-making or inclusion or a bunch of other values, justice, equity, you're looking now at values of efficiency, productivity, return on investment. What's also happening, of course, is on the program side, which is you're looking, or you're emphasizing, at least prioritizing programs that you can demonstrate are scalable, that can show impact in the short term, that are easy to measure, that are cost efficient, and will look good on the donor's annual report or website. The other thing that's missing currently in our ecosystem is there is no critique of philanthropy. And so where we are right now is If a wealthy person or any person really decides to give away any sum of money towards a social cause, this is all good. It's an unmitigated good. We're not asking where the money comes from, what are the circumstances which make philanthropy necessary and philanthropy possible, rather than just assuming that this is the way things are. That's the critique from the left, if you will. On the right, the critique is, who are these people, these philanthropists who are influencing policy without any kind of accountability? Are they, is there a foreign hand here? Do they have a political agenda? Mr. Soros in particular comes for a great deal of criticism. For civil society and nonprofits, on the other hand, in addition to all this, what we're dealing with is not just converging crises, because there are multiple crises converging. But what we also have is each of these crises is at a tipping point. So whether it's climate and extreme weather events, or whether it's social conflict and polarization in our society, whether it's humanitarian disasters like COVID, and hopefully none more on the scale of COVID, but we still need to be prepared, or runaway inequality, or the continuing assault on our basic freedoms of expression, of association, of assembly, and the growing constraints on civil society space. This is something we're having to deal with, all of this, all of them reaching tipping points at the same time. So this is just a list of the new records that NGOs must maintain. This was shared last week. You have to keep now all of these things for 12 years. And if you are under assessment, you will have to keep them even longer. This is just to give you a sense of the burden of compliance that NGOs are now facing. So it sometimes seems not even snakes and ladders. It feels like a minefield sometimes, which is, if I actually try to comply with this, I'm going to run afoul of that. And so you have the new FCRA amendments. Many, I think hundreds of organizations have had to submit to FCRA audits. As of yesterday, when I looked at the data, only 1/3 of the organizations that have applied for FCRA renewals have actually got a decision. 15,000 organizations, more than 15,000 organizations have applied, just over 5,000 have actually got a decision. At the pace that they're going, we could be looking at 2024 before some of us hear about whether our FCRA is renewed or not. And there's, of course, the prevailing uncertainty. I know for CSIP, we have substantial sums of money that are blocked because the donor is not willing to remit that money until we get our FCRA renewed. The same with income tax, the same with CSR. And of course, now the new weapons, which are the Prevention of Money Laundering Act and the other weapons of the Enforcement Directorate. What you're seeing, therefore, is a combination of a chilling effect, which is NGOs having to think twice and self-censor ourselves. Say, should I say this? Should I do this? Should I take this risk? There's this huge compliance burden. Even the largest NGOs in our country are finding it difficult to meet this burden. They are all looking at staffing up. And for many of you, staffing up is not an option. You don't have either the bandwidth or the financing to actually build a whole compliance team to help you do this. And finally, of course, is the sort of thing I mentioned, which is paralysis, because you're waiting for this money to arrive and you're not sure if and when it will. Finally, really, the last sort of piece of this somewhat depressing picture that I've been painting, I'm sorry, is the ecosystem itself. So whether it's, where do I go to figure out what the latest notification on FCRA is, or on CSR? Where do I go to find out how I fill this form? Where do I go if I want to create a conflict of interest policy for my board? Is there a template somewhere that I can use? So just basic information in a timely, reliable way, basic resources when it comes to legal and financial input. Where do I go to find out, who are the donors that fund in my geographical area or in my thematic area? Where do I go to find out what is the appropriate compensation for a CEO of an NGO that has a budget of 50 crores? What are, human resource policies that I need to implement. Technology. How do I, as a nonprofit that doesn't understand this field, how do I even know what my technology requirements are, let alone then being able to choose a solution based on what's out there in the market? Where do we go to have some influence on the policies that affect us, or being able to tell our stories? We have IDR, for example, the India Development Review, but how else do we get to the public, get to decision makers, get to donors, to build our brands and to tell not just our story as organizations, but our story as a sector as a whole? Where do we go to develop norms on transparency, on accountability, on ethical fundraising, on a range of issues? And where do we go most of all to build partnerships among ourselves and to find solidarity with each other? All of these need investment in. All of these are directions really that government and philanthropy and us as a sector need to be putting more time and effort into. So it sometimes feels, if you're a nonprofit leader, that your days and nights are spent just keeping your head above water. Just when you think you've sort of coped with whatever it was that yesterday threw at you, there's a new crisis, a new demand today. And then on top of all that, we got COVID, as if that wasn't enough. What we saw in an after COVID versus before COVID environment was certainly in 2020, this big surge in giving. So all kinds of donors, whether it was big philanthropy in the form of foundations or the CSR donors, these donors focused a lot of their investment on funds like PM Cares, but then the other areas that they focused on were what I'm calling health hardware, so ventilators and respirators and PPE and all that good stuff, or vaccines in the second phase, or livelihoods for migrant workers and others. The new philanthropists that we've been talking about came to this with a slightly different mindset. They were looking at this more venture capital mindset, venture capital in terms of metrics and pace of change, not venture capital in terms of uncertainty of model, or they weren't venture capital in the startup ecosystem is, well, I believe in you and your idea, and I'm going to stick with you while you figure out how you're actually going to deliver this through 3, 5, 7 years when you make no profits. That's not the case on our side. On our side, we get the venture capital mindset in terms of metrics and return on investment, but we don't get the latitude to experiment and try out different models. What they are, however, is that they're agnostic about whether you're a for-profit company, a non-profit company, or something in between. They're really looking at impact, and they don't care so much about what your registration document says. They're definitely more impatient about the pace of change, and many of them prefer technology-led solutions. A segment we don't often talk about is overseas Indians, people like Cash. I think what changed in COVID, they've always been exceedingly generous. I believe, I need to refresh the data on this, but I believe the Indian diaspora is the most generous diaspora in the world, more than even China and Mexico, which are the other two, and Nigeria, which are the other three contenders. But what changed during COVID was not only were we getting money from the usual diaspora donors, which is Silicon Valley types, techies, the Physicians Association, and those kinds of donors, but everybody got on board, students, employees at companies. So for example, you had employees at a company like Salesforce really making Salesforce a significant donor to India, which they had not been pre-COVID. The other thing that shifted was the diaspora Indians moved from just giving money to also doing advocacy. So with the Biden administration in the US in particular, there was concerted advocacy about policies on the import or the export of vaccine ingredients, for example. And finally, there was the rest of us that really gave to immediate needs. So things like food, cash, transportation, and most of this was online. And so we saw this huge growth in online giving. Depending on which platform you talk to, this is between 200% and 500% growth during COVID. But the biggest phenomenon of all was the phenomenon of what's called mutual aid, which is just people reaching out to people to deliver whatever it was they needed. And that could be help getting a hospital bed. It could be help accessing vaccines. It could be delivering groceries to elderly people in your neighborhood, whatever. For civil society organizations, what this meant was the communities we were serving pre-COVID suddenly had a spike in their demand, but we had communities that we had not been serving who also turned to us for assistance. We saw our funding get more uncertain, particularly with CSR donors shifting priorities. Many organizations had to cut their budgets, had to take salary cuts. If you worked in something like arts and culture, for example, it became very hard to do any kind of fundraising. If you worked in something that was a highly hands-on service delivery that required physical interaction, that became impossible to do. And so there was either paralysis or complete redesign, something that I know Cash will touch upon tomorrow. Many non-COVID causes got crowded out. And of course, your success, which is, again, I think something that Cash will probably cover tomorrow, is dependent very much on your ability to pivot. Could you pivot to finding new donor groups? Could you pivot your programs to reach new constituencies? Could you use technology to completely change the way you operated? McKinsey is saying to us that donors in the West have changed in multiple ways, that they're looking to reduce the burden on NGOs of applying and reporting on their funds. They're looking at getting more money out quicker. They're looking definitely at more collaboration. They're looking at putting money at the grassroots where it makes the most difference. And there's much greater appetite for partnership with government. We're seeing many of those trends play out in India as well. Certainly, collaboration is the buzzword in the philanthropy sector. We saw the Omidyar funds, there are 3 of them, all of which encouraged collaboration, all of which were accelerated in terms of the speed of decision-making. All of them looked at either investing in local communities or investing in building capacity. The Bridgespan initiative, which is looking at getting donors to pay their full share of overhead expenses, was another key initiative during this time. And then, of course, there are the other collaborative funds, Edelgive, Dasra, and now the latest one from Dasra, which is not a fund so much as a collaborative learning, peer influence kind of group, which is called Giving Pie. Of course, we all had to relook at the way we are structured internally, and do we have the capacity to respond to crises, particularly in the area of technology. So we saw, for example, between 2020 and 2021, about the numbers of NGOs adopting technology went up from about 1/3 to about 2/3 of the organizations that we surveyed. So 100% growth in the number of organizations that said that they were adopting new technology in their operations. And of course, the growth of the diversification of fundraising channels. The old wisdom, which said, if you just have a sustainable business income, for example, you don't need to worry about donors. That just fell flat during COVID because your supply chain froze, your distribution channel froze, and so you weren't able to get any revenue through that channel. You might have been dependent on CSR donors, and they changed their priorities. So the need for a more diversified portfolio of donor types and of fundraising channels became evident, and we're seeing a lot more interest among NGOs to build, for example, online fundraising, but also other kinds of channels. This was something that I really hoped for, and that would come as a consequence of COVID, but I have to confess that the response has been less than heartening. So I thought that, or we thought at CSIP, that donors would get it, that they really need to go upstream. They need to focus on community empowerment rather than simply service delivery. Some of that has happened, and you're seeing large numbers of donors, for example, get to the point of investing in capacity building or in institution building. But the prospect, for example, of being able to make radical change in the ecosystem at large, to reinvent our public health delivery system, to reinvent the way we think about labor rights, to reinvent how we think about accessibility for people with disabilities, or to completely create a much, much more robust system of social protection. That I fear is a bus that we may have missed. There's been some progress, particularly on labor rights, but not enough. So to sum up, while we have new capital, new instruments, new marketplaces, new mindsets, new channels, new collaboratives, new opportunities for scale, potentially new receptivity to more radical policies, we still need to work, as I said, on building our capacity to tell our stories better. But really what we're looking at going forward is not a return to business as usual, not even a settling or an equilibrium in a new normal, but really being able to design ourselves, our organizations, our processes, and our programs to adjust to a world which perhaps is going to keep throwing disruption in our path. So a world of never normal rather than new normal. One other trend that I want to highlight is the broader economy, as we know, globally and in India. If we're talking about this K-shaped recovery, right, which is there's one set of people that has done exceedingly well through the 3 years of COVID and continues to do well. So even in India, there are nonprofits who have grown 400-500% during COVID because they were able to pivot to offering the kind of services enabled by technology that the market was interested in. Most of these will tend to be the middle of the road, service delivery, safe, non-controversial kind of technocratic approaches. Most of them will be based on a theory of change that says, I will pioneer a model and then the government will take it to scale. On the lower arm of the K, however, are organizations who take a more rights-based approach, who do campaigning, advocacy, and research, and who work with marginalized communities, particularly organizations led by people from those communities themselves. And so we're seeing a consolidation at the top, and we're seeing real disaster at the bottom. I was talking to somebody in Madhya Pradesh recently, and he said that 80% of nonprofits in Madhya Pradesh were on the verge of shutdown. When we did our survey, we were looking at 25-30% of organizations that were on the verge of shutdown. So we still don't have good data on this, but this is what it looks like. In terms of coming back to fundraising, to sum up, you need, if you're going to make it in this new brave new world that we're dealing with, you're going to have to provide your donors, investors with a much higher level of agency in shaping your initiatives. You're going to have to become more agile in terms of this pivoting that we keep talking about. You're going to be able to have to tell your story in a way that sounds and feels authentic. You're going to have to learn to work better in alliances and collaboratives. But equally, you're going to have to invest in specialist skills. The days of the gifted amateur, I fear, are those organizations that are well-meaning, but not necessarily technologically skilled, professionally skilled, maybe numbered. And so whether it's skills in data or technology or channel management or social media or financial innovation, are all areas that we need to invest in. I think where we need to go is how can we invest in these collectively rather than having to face the burden of investing in them individually. I know there are at least 2 initiatives on right now to create this kind of service hub that will allow nonprofits to get some of these skills and inputs collectively rather than individually. So really from that scene where you're barely keeping afloat, I think where we need to, our vision really should be to how do we create this star fleet, if you will, which allows all of our starships to boldly go where nobody's gone before, because we can count on donors and an ecosystem that allows us to get the knowledge, get the skills, get the technologies, etc., that we need. And since it's the 75th year, really, I think beyond technology, skills, professionalism, all of that nice stuff, we really need to reconnect with why we do what we do? What is your purpose? We all heard multiple times last week the first lines of the speech, the tryst with destiny part. If you go down that speech, there's a paragraph that talks about what we need to do. And this is what it says: to create social, economic, and political institutions which will ensure justice and fullness of life to every man, woman, or really to every citizen. That's my spiel. It's been long enough and dense enough, but I will take for the next 15-20 minutes some questions or comments or criticism or so. What is the major difference between 12A, 12AA, and 12AB? I don't have the technical expertise to that. You should talk to a chartered accountant on that. Any capacity building plan put in place by SEBI on the social stock exchange? This is from Bhushan. The first question was from Ananga. The second question is from Bhushan. There is that 100 crore fund that I mentioned, but there isn't actually a plan yet on how to implement it. Disability is mentioned. It is part of the list. That's to Vaishali. What will be the benefits for investors? The benefits, if you're investing in a for-profit social enterprise, then you will basically be looking at some kind of blended return. So you will be looking at some part of your return as financial return and some part of it as impact. But if you're investing in a non-profit, then really your only returns will be social impact. Examples of organizations in the social businesses segment. I'm actually more, there are a number of these hybrid organizations. If I look at India Development Review, IDR, for example, they have two organizations, a non-profit and a for-profit. Hasirudalla, that works with waste pickers in Bangalore, similarly has a non-profit that works with the organizing of the waste pickers, but then there's a for-profit commercial enterprise that delivers waste management services to housing estates and businesses. There are a lot. They're proliferating actually much faster than NGOs are. That was a question by Deepanshu. Can Section 8 companies raise debt and equity by MITA? No, they can't. We will still be limited to grants, social venture funds, and development impact bonds. Do you CSR exchange and social stock exchange? So yes, it's possible that they will collaborate. This is by Bhushan again. But really, if the social stock exchange is going to deliver value, it should deliver new capital. If it merely redirects capital that is already coming to social impact in the form of CSR, then it will have failed. It needs, if it does not attract new philanthropy from both institutional and individual and the public at large, the retail investor, then I think the social stock exchange will not have met its goals. What other questions? How will the social venture fund work to promote? I'm surprised that all the questions are social stock exchange related. How will the social venture fund work to promote collaborative work? So my hope is that, so for example, you could launch, somebody launches a social venture fund on climate, right? It's a climate social venture fund. It then attracts investment from institutional donors, retail donors, anyone who really says, climate is my cause and I want to contribute to it. What the fund manager then does is curate a collection of nonprofits who collectively will achieve impact on the climate crisis. This collective or this portfolio of organizations could include organizations doing research, organizations doing campaigning, organizations doing technology delivery in terms of helping companies green their systems or providing solar panels or whatever. So ideally, it's not just a pooled fund where people make individual contributions to a large number of NGOs. Ideally, it's a group of NGOs working in concert to collectively deliver impact. What else? Are there any thoughts around how civil society can galvanize around a common value chain to, if you have 100 organizations working on education, could be. So I think there are some fora and some collaboratives now focused on particular thematic areas. So you have people working with migrant workers who all work together. Yeah, there are at least a couple of 2 or 3 of those collaboratives. There's certainly several in education, many now post-COVID in healthcare. And you certainly should connect with those if you can. Organizations like Dasra, for example, with this new Giving Pie initiative, or even with their earlier work with Giving Circles and so on, have been a really huge value add in terms of being able to do this. Dasra built, for example, a collaborative around adolescent girls. They built a collective around fecal sludge management, not the most popular topic. They built a collaborative around access to justice. And so, yeah, there are those thematic collaborators. What's missing is a sector-wide collaborative that can look at issues of the sector as a whole and not just. There's also, I would be very remiss to not mention it. There is this huge global coalition which has a very large India chapter, which is called Catalyst 2030, which is organizations working on the SDGs. So if you work on any SDG whatsoever, then really you should be part of Catalyst 2030. That was from Ankita. Most social are far from these. I hope this doesn't result. So, this is the biggest criticism of the social stock exchange, is that, is it only going to exacerbate the inequality? Is it going to, help the big organizations, the big professionally run organizations get even more money and restrict the smaller, more grassroots organizations even further from access to capital? And the reality is yes. But think about the main stock exchange, right? The business stock exchange. I did some math recently and I discovered that only 0.3% of Indian companies are listed on either stock exchange. The vast majority, 99.7% of Indian companies are not listed on any exchange, not even on the medium and small enterprises exchange, which has a specialist. So, but what the existence of the exchange does is lift the credibility levels of the corporate sector as a whole. And that's the big prize for us. So even if you don't list on the stock exchange in terms of being able to raise capital there, if you can find it in yourself to at least adopt the reporting standards, for example, of the stock exchange, if you can find it in yourself to submit to an impact audit by a certified impact auditor who is registered with the social stock exchange, then your credibility levels with all donors go up, including donors who are not participating in the social stock exchange. So there are 2 big prizes from the social stock exchange: more money and more credibility. And that's what we need to focus on as a sector. That was also from Bhushan. Who else? Have I answered all the questions? Is somebody keeping track of? Would the impact auditor be the same for CSR and social stock exchange? Not necessarily, but my guess is that donors, especially CSR donors, will prefer impact auditors who have been certified by the social stock exchange. Would RCTs be the bar of impact? No, in fact, the impact measures are quite liberal. So it includes, for example, just storytelling. It includes feedback from the community. So this is why it's really important for you to go to that ICAI impact indicator list and put your comments in there, because if you don't do that, you will end up with RCTs being the bar of impact. That was to Ankita again. Is governments not backing social stock exchange the only reason? No, it's not. They all have very limited offerings. And do look at the Samhita report, because it does a detailed analysis of social stock exchanges around the world. How do we improve the fundraising environment overall? I think there are a few things we can do better. I think we certainly need a better collective voice so that we can tell our stories better. I think we really need to get the media on side in terms of getting them to understand what we do and tell those stories better. But equally, we need to, just like we do capacity building programs like this for nonprofits, we need to do capacity building programs for donors. They need it as much, if not more, than nonprofits do. And I'm happy to say that this is the big new initiative from CSIP this year is exactly that. We've piloted a capacity building program for new philanthropists, and we've got a capacity building program in design now for established philanthropists as well, which will really help them to think about what they give to. So what are how are they deciding their philanthropic priorities? But not just how, or not just what they give to, but how they give. So the value of long-term commitments, the value of flexible funding, the value of endowments and core funding to really push the bar, change the norms on that is the second thing I think we can do besides the narrative. So capacity building for nonprofits is certainly how can we best leverage? CSR provides funding by second quarter and require full utilization. What are thoughts around? How do we adapt to the new CSR rules is the question from Sonia. I think we really need to push back against these rules. And I think even the committee that worked with the ministry, people like Amit Chandra and others who were instrumental in putting these rules together now understand that some of these rules are counterproductive. And so we need to really lobby hard with some of these influencers to make sure that we can get better, more sensible rules for CSR. In the meantime, I'm sorry, I don't have any great hope. Maybe I'll take the question from Kushal, Kushal, you've got your hand up, right?
Yeah.
Please go ahead.
I did. Yeah, Yeah, hi, I'm Kushal. I just have a quick one to say thanks for the presentation. It ties up very well. What I felt is what has been there always is one side we see that a new group of donors trying to fast track and make changes with money, and they want to replicate whatever they have achieved in their core businesses, for-profit ventures. But the ecosystem which will be absorbing that funds, if I may say so, I don't want to hurt anyone's sentiments. I've been here in these last 23 years in this sector, but I think we have not been able to move further in terms of capacity building, in terms of the strength, because of various reasons, and most of them not within the control of the NGOs which were operating. You know, we went as you were describing very well. You know, as is, you know, it's always a status quo mode. Given that what you just said in terms of CSIP taking endeavors in upgrading such donors, in at least increasing their visibility of what is expected and how we can strengthen them, it is very important. You know, there are many, I saw you showed account aids document. You know, Sanjay has been trying very well. There are a few others like him trying very well, but it seems the reach is not enough. Right, that is one. The other one, when I used to, currently I do not do enough of frontline working, but when I used to do that, I've seen a lot of exodus of people from the field side. Is it still going on? If it is still going on, we need to do some more factors around it to retain people, so that the commitments we do on this impact funding or the variety of complicated funding which the donors which the NGO sector is not aware of, can do it. So somewhere I think organizations like yours need to step in. There are a few, but I think the angst still remains, the issue still remains. Somewhere we need to do something. Yeah, over from my side.
I can't speak to this, what everybody in the sector is doing. I certainly mentioned, for example, some of the things that Richspan and Dasra and others are doing. What CSIP is focusing on is three things. We are working with the National Foundation of India, National Foundation for India, to create a new National Civil Society Association that will do two things. It will be an aggregator of the services that you've talked about. So, how do I find out that a Sanjay Agarwal exists unless I know somebody who knows Sanjay Agarwal or somebody forwards something from Sanjay Agarwal to me? I can't. So can we create a one-stop shop that's a platform for all of these service providers to find NGOs and for NGOs to find them? Not just in accounting, but in technology, in human resources and other areas. So that's one piece. The second piece is a report that will come out next month, which is focusing on talent, which is the other issue that you raised. So what this research will do is essentially map what the compensation levels in the sector are right now for all kinds of organizations. So this will be for ecosystem players, philanthropies, grassroots organizations, large, medium, and small. It'll create a uniform typology of roles, first of all, so that I can compare this program manager to that program manager, because as you know, the titles mean nothing in our sector. What you call a program manager, what I call a program manager will have entirely different qualifications and job description. So standardization of roles followed by a compensation mapping, which we hope individually each of you can take to your donor and say, we are currently in the 10th percentile of this. And if we're going to attract the talent we need to make impact, we need to move to the 50th percentile. And therefore, we need to raise our salaries by this much. Or if they're challenging a proposal saying, why do you need to pay so much for the personnel component of this, you'd be able to now have the data and say, this is what it costs to, on average in our sector, to get this kind of talent. But equally, to be the second part of what the study will do is showcase case studies of organizations that are doing disproportionately well, organizations that are well above average on their ability to attract talent, to develop talent, and to retain talent. And so hopefully there will also be some ideas for the rest of us on not just money, but all the other things that go into being able to attract talent and keep it motivated. Something that we've all learned, sadly, through COVID, it's more than just money. I think people are looking for a whole range of other things. I'm getting a time check from Anchal.
Thank you. Thank you. Bye.
Maybe I'll take one last question, Meeta, since you have your hand up.
Yes, thank you, Ingrid. So I'll quickly sum it up. So, I come from corporate sector, 20 years in corporate sector and 5 years now in social sector. And, my whole sort of a dichotomy is I come from a fast-paced industry to this, exactly opposite of what the earlier person was saying, right? I just couldn't cope up with this pace. I wanted to do more and bring more efficiency here. And that led me to ISB to do my research. I'm also a doctoral student there. So I've been studying a lot about social stock exchange, and I'm really excited with what you've presented and the expected outcomes of it. So, there is, if everything goes the way it's laid out, we can see some sea of change in the entire sector. And this is just to say that, Ingrid, I would really like to do more with you guys. This looks so exciting, and exactly the reason why I stepped into the social sector from corporate sector. So I'm available at your disposal. I would love to do some sort of research as a doctoral student, as a person from the social sector now. So yeah, giving you hi there.
Sure. So let's connect offline,
Yes.
and we can take it from there.
Thank you.
I understand what we're going to do now is take a 10-minute break, since I have sort of dumped all this content on you and you need a quick, maybe a comfort break. So we will come back. Anchal, are you saying that we're coming back at 7:05?
Yes.
7:05 India time is when we need you to be back. Go quickly grab your coffee or whatever it is you need to see you through the second half of this, which is, I promise you, much more exciting.